The Magellan Global Trust is going to be an ASX-listed investment vehicle by Magellan. It will invest in a focused portfolio of some of the best businesses in the world. Importantly, it's going to deliver a consistent 4% cash distribution yield to investors, and we're going to manage the Australian dollar currency risk in the vehicle. In terms of investment objectives, we have two simple fundamental investment objectives. The first is the preservation of capital. And what we mean there is really taking out significant downside drawdown risks in the strategy and managing the volatility. And the second is to generate an attractive risk-adjusted return over the medium-long term on our investors' capital. The investment philosophy behind the Magellan Global Trust is the same philosophy that we apply to all our products. We're a benchmark agnostic investor. What we mean by that is we're not concerned about our short-term relative performances to indices. Our trust is going to have a 15 to 35 stock portfolio. The MSCI World is 1,600 stocks. We look nothing like the index. We do all our own research. We never buy or sell a stock on the basis of someone else's recommendation. And really, we look through the investing problem through the long-term lens. You could sit in front of a Bloomberg terminal and you're bombarded 24/7 with new information, but the challenge as an investor is really to look through all of that short-term noise and to distill what really matters, and that's what we focus on. In terms of stock selection, the first step for a stock to make its way into our portfolio really is a qualitative assessment, a very deep, researched qualitative assessment of the industry in a specific company. And our investment committee, which is comprised of 11 senior members of our investment team, opines on the quality of every company. If that company meets our standards to be what we consider investment grade, then it goes on to our menu of approved stocks. And that really creates the menu for the portfolio manager to choose their portfolio from. So the second step then is once a stock is approved, our coverage, it has a dedicated coverage analyst who follows it very closely with an updated valuation and updated risk assessment continuously. The portfolio construction process, then we as portfolio managers, we're looking at all that information now approved. It's currently almost 200 stocks that we have on our approved list that we follow very closely. And we're basically trying to construct the best risk-reward combination of those stocks. Think about it like a football team. We want to pick the best players for our team, and we want to think about how they interact with each other in terms of risk aggregations when we construct our portfolios. At a portfolio level, the Magellan Global Trust is going to be very similar. We're calling it a very close cousin of our existing global equity strategy. We're going to have marginally more concentration, a 15 to 35 stock portfolio versus 20 to 40 in our global equity strategy. And in the trust, we're going to manage the currency. What we mean by that is our global equity strategy has a fully unhedged unit class and a fully hedged unit class. We're going to bring that decision of whether or not to hedge into the vehicle and how much to hedge at an appropriate time. The key difference really is not so much the portfolio differences. The key difference with the trust is what I call the structural differences, and that's the consistent 4% cash distribution yield that we're going to manage through time to be consistent. In the unlisted trust world, that distribution percentage can vary up and down significantly through time. We think about the dividend yield as really taking the total returns of the investment strategy and converting 4% of that into a consistent cash flow, cash yield to unit holders. There are really three sources of income in an investment trust like this. There's capital gains in our stock positions, which are the majority. Then there's the smaller contribution from underlying dividends on the stocks and the gains on the hedging program. Those capital gains on stock positions, the realisation of them is lumpy through time. They can be very high in one period, they can be next to nothing in one period, depending on the underlying trading we're doing at that moment in time. What we're doing is smoothing out that lumpiness to give a consistent cash distribution yield. So taking those sources of income and smoothing them in terms of the returns that go to unit holders. We are going to have a dividend reinvestment plan, and we're going to strike it at what we believe is a very attractive 5% discount to the prevailing NAV at that time. Importantly, Magellan is going to fund the value of that discount in cash into the vehicle every 6 months. What that means is that investors taking up the DRP are getting effectively a bonus on their distribution, and investors who don't take it up are not being diluted by the discount. Look, there are risks associated with any investment strategy, and particularly with regards to our trust, I would encourage all investors to read the PDS, the Product Disclosure Statement, in detail. It outlines a lot of the risks in a lot of detail. It's very important. Look, frankly, we have no idea where equity markets will go over the next 6 to 12 months, and nor does anybody else. We really believe that investors need to take a medium-term view, medium to long-term view for their equity portfolio. And we really fundamentally believe if you invest in high-quality businesses and you buy them at attractive prices, the chances of generating a loss in terms of erosion of shareholder capital over the long term should be really quite low. You should get quite a good investment outcome. There are two broad ways you can participate in the Magellan Global Trust raising. The first is via the broker firm general public offer, which is available to all residents of Australia and New Zealand. You can contact your broker, you can go directly to the trust website down to the PDS and the application form. And the second is the priority offer that's being made to existing Magellan investors. One point I'd make about the offer, I think this is a very important point when it comes to alignment of interest between ourselves and the unit holders. These vehicles are often quite expensive to raise the capital. The typical costs are around 3%. We are going to pay all of those offer costs upfront in cash. That's very important because it means that on day one, the issue price is $1.50, there will be $1.50 per unit of cash in the vehicle being put to work for investors. Any investor in any of Magellan's existing retail unit trusts or shareholders in Magellan Financial Group as at the 1st of August will be eligible and will receive a loyalty entitlement invitation. That invitation will be for a minimum of $30,000 or 10% of the value of their holdings as at the 1st of August to take up their investment into this trust via the priority offer. Attached to that priority entitlement offer will be a distribution of an additional loyalty bonus of 6.25% additional units that they hold. The full economic costs of those additional units are going to be fully paid for by Magellan. They won't dilute any of the other shareholders in the trust.